This is part 2 of the Unit 6 notes screencast. I got cut off on part 1, so here's just a couple more slides to end the presentation. So how does the deductible work? Keep in mind, the deductible applies to just about any type of insurance, whether it be auto insurance, homeowners insurance, and then also medical insurance as well. But in terms of auto insurance, how deductible works is that the lower the deductible, the higher your insurance premium will be. Keep in mind, the premium is the amount that you pay in order to maintain your insurance. So whatever it is you pay, whether it be monthly, some insurance companies will collect every 6 months. That's what your premium is. So the lower your deductible, the higher your insurance premium. Deductible for cars typically is either $250, $500, $750, or $1,000. Okay. If your deductible is lower, you're going to have that higher price for the premium. So some people will opt to instead have the higher deductible, knowing that they have, perhaps the $750 or the $1,000 put aside in savings so that they have access to it when they need it, so that they pay less each month or every 6 months for their insurance. If you have a $500 deductible, you must pay $500 of the bill before your insurance pays for cover incidents or claims. So that's something that you have to keep in mind when determining whether or not you actually want to make an insurance claim. Is it worth it? Is that bill that is going to cost you to fix your car under the amount for your deductible? Then more than likely it may not be worth it for you to make that claim. Or if it's even just slightly over, you may be better off paying it in cash and not having to file that insurance claim, because depending on the situation, when you file those claims, it can increase the price that you pay for your premium for insurance. Your deductible also may be different for comprehensive and collision than it would be for liability. So that's something to keep in mind and to make sure that you are aware of. Make sure you also listen closely to your agent as to what is covered and what is not covered, because once you sign, you're responsible for whatever it is that you have agreed upon. So what do you do to file a claim? First thing you're going to do is you're going to call your agent, and he will give you directions in terms of, did you file a police report? Take it to this location, take your car to this location to be looked at in terms of what work needs to be done, etc. If it is an accident, you must call the police and file a police report. This is going to be very important in terms of whether your insurance will actually take your claim or not. Whether someone was given a ticket or not, having that police record is what's needed in order for them to determine oftentimes if your insurance company is going to take that claim. Depending on how serious the accident, you may drive the car to the claim center or someone will come to you. And then you're also going to have to get bids on the work needed, and the insurance company will cover what it decides according to your policy. So either the insurance company will send somebody out to that place where your car is, or whatever collision shop or what have you you're at, will report to the insurance company what the damage is, and then your insurance company will contact you and let you know potentially how much you're going to have to pay in order to have your car fixed. So when you file a claim, what's going to happen to your rates? A couple things. Usually rates will increase after an accident, especially if it is your fault, or they will also be higher for receiving tickets. So in the case that perhaps you do get a speeding ticket, oftentimes it'll be in your best interest to do what you can to get that off your record so it does not affect your insurance premium, which would be paying a little bit more money for than you would have paid for the ticket, and then going to traffic court. Usually it's about 4 hours. If you have that option, it will throw your ticket off your record, which will keep your price of your insurance from rising. And also just being a careful driver. It's just like anything else in life. When you don't take the time to be careful, oftentimes those things and mistakes that you make are going to cost you money. So just kind of as an overview, remember there's 2 different types of auto insurance. Liability covers what you caused. Comprehensive covers any other incident, robbery, such as, robbery, tree falling, damage to your car in an accident. And then keep in mind that if you have a car loan, you will be required to carry comprehensive and liability because they own the car, usually a $500 deductible. So in other words, if you do have that comprehensive insurance, if you are paying a car loan and you're paying off your car over time because you loaned money for it, oftentimes that bank will require you to have a deductible that's about $500. They won't let you go any higher because their main concern is making sure that they actually get their payment for that car every month. And if you get in an accident, you have to pay more to get that car fixed. They just get a little concerned about making sure that they get what it is that's owed to them as well. If you have reached the end of this screencast, thank you for taking the listening. If you come to Ms. Cochran and let me know that you have made it to the end of the screencast, I will be offering extra credit. So what you would have to do is actually just send me an email, ecochran, ECOCHRAN, at jths.org, saying that you made it to the end of the screencast, and I will be giving extra credit to students who send me that email.